Welcome. You are listening to Purpose Driven Wealth, the podcast for empowered investors. If you're an investor who is tired of playing the Wall Street casino, stay tuned. On this show, we bring on industry experts to discuss leading strategies to help you make empowered decisions with your hard-earned capital. And now, here is your host, Bina.
Welcome to Purpose Driven Wealth. I'm your host, Bina. Today on the show, we have Eric Yakes. Eric is a graduate of Creighton University with degrees in finance and economics. He has worked in the financial industry and is the author of The Seventh Property, Bitcoin and the Monetary Revolution. Eric, welcome to the show.
Thanks for having me, Mo. I'm excited to chat today.
Yeah, thank you for coming on. Eric, let's start off with kind of sharing your experience working in the financial industry and how that kind of segued and how that kind of eventually led to you being attracted and involved in the Bitcoin space.
Yeah, absolutely. So, I started off, I was working in corporate finance and restructuring for a firm called FTI Consulting. And, effectively what we were is, it was a management consulting business, but kind of in a niche area of like turning around companies that were suffering challenges or going through business combinations. And, that kind of allowed me to cut my teeth within an area that, you see a lot of the malinvestment that exists within the economy, and you see how all these zombie companies keep, perpetually turning over their debt. And, I had an interest in economics from, around when I was 18. It was actually kind of what led me to finance was first just reading into economics. I was always kind of captured by the idea of like, here's how, a framework of thinking to make decisions about the world. And, it's more philosophical in nature than anything else. So with that in mind, I always kind of had an interest in, central banking and what's going on in the economy, despite my experience kind of being more focused on private markets and, corporate combinations. So I think that that was kind of something that was always in the background for me. And that's kind of what piqued my interest in Bitcoin originally. And I think that when, I first heard about Bitcoin in college, my senior year, and I think that was back in like 2015. And my conclusion was this is a speculative investment. It doesn't have any fundamental value. And then it was a few years later at my first job when I started hearing about it. One of my colleagues kind of kept pushing on it. He had a much more of a technology background. He's like, look, it's really interesting technology. And kind of the conclusion I was at that point was like, look, it's not that I doubt that it's an interesting technology. It's more that I don't know how to value this thing. And if I don't know how to value it, how do I make any sort of reasonable investment in it? And, that was, it took me a while until, there was some point when I was reading a blog post. And this was at my second job that I moved to, when I was working for a private equity fund that specialized in buying distressed corporate carve-outs or, companies that are typically declining that are a carve-out of a larger enterprise. And, through that process, I always spent a lot of my free time just kind of reading about Bitcoin, because once I got hooked, I read this blog post, and it was the first time that it made the connection in my mind, like, oh, this is an alternative to central banking. And really up until that point, I always thought this is how the world works. We're going to have these perpetual cycles. We're going to have booms and busts. Governments use this as a form to, create revenue for themselves. And, it's just the way that it is. And then once that connection was made for me, all of a sudden everything rewired in my brain. Because, at that point I was like, I read in when you read into Bitcoin, it's like, oh, here's kind of how blockchain works and stuff like that. And I was always kind of like, okay, I kind of get this. I don't really see the value. But once I heard that, all of a sudden I got really interested. And then I started getting a lot deeper. And that was a longer journey because I kind of went down this whole path of researching other cryptocurrencies and, what makes them better than Bitcoin. And it really took me a long time to come full circle and all the way back around to, oh no, Bitcoin is, fundamentally distinct from all of these. It's the only thing that really does serve the purpose effectively of being an alternative to a central bank, or at least has the greatest chance of doing so. And once I kind of got to that point, I was like, okay, this is a really big deal. Also, over that period, it started to scale to a point where, it spread so far that it would be very hard to put the genie back in the bottle. And that's when I was kind of like, okay, well, it would have been one thing back in like 2016 for me to take like career risks going into this. I wasn't as certain about it back then, but knowing what I knew at this point, this was around the end of 2019. Basically, my thinking around this was like, okay, worst case scenario for Bitcoin, it becomes digital gold 2.0. And then best case scenario, we have a new global apolitical monetary system. So like that's kind of like the range that I still think between for it. And, And it was good. I guess one other point I want to make, going back into my background, I was a CFA as well. And one of the things that held me up on Bitcoin on the valuation piece for a long time was, you have a framework of thinking of discounted cash flow analysis or some sort of like comparable multiple. And that just like simply didn't apply to a new monetary good. And that was when I was like, okay, it took me a while to get to the idea of like, oh, we're not looking at this as any sort of like network that produces some form of cash flow. We're looking at this as an emerging monetary good, in which case that's a top-down analysis that you need to conduct in order to like get to some sort of valuation, which is just market sizing and making assumptions about what percentage it'll capture of what various markets. And then that's when I was like, okay, now I have a framework of thinking for it. So once I kind of had that framework of thinking, then I was like, okay, I want to jump into this industry. And back then there was, I think the Bitcoin Standard was one of the, that was the best-selling book, and that was probably the best book to give somebody if they're coming out of the traditional finance world to learn about Bitcoin. And Bitcoin Standard covers a lot of areas. It focused mostly on the history of money. And from my perspective, I was like, knowing my background being from private equity and having a CFA, I was kind of like, okay, I think there's actually a lot of other things that people need to know, and like a starting resource if you're, kind of focused from the investor's perspective on getting your head around Bitcoin. And that's what I set off to do. I spent about 9 months getting kind of deep into all the areas that I really wanted to get deep into. Um, and that was a little trickier for me. I was just like this meat eater finance bro type, and I didn't know anything about computers. So I had to teach myself Python so that I could kind of get deeper into some of the technical texts around how Bitcoin operated to get my head around it. And through a lot of that, I also, researched into banking. I always had a high level idea of how things worked, but I wanted to get a little bit more technical and really, answer as many questions as I could for myself. And then also getting into the history of money and trying to find a way to like frame and tie all that together. And going through that process, I really realized I was like, okay, there's a lot of things about Bitcoin that I think people get lost in the minutia on, and you can actually summarize a lot of that pretty effectively. You don't have to read a developer textbook to get that level of understanding, but nothing really quite existed at that level. I wanted to be the happy medium between technical enough to really know what's going on and how the incentives of the network operate, as well as high level enough to where a broader investment audience could still probably understand it. To my surprise, it ended up being quite a bit broader than that. But anyways, the goal of my book was to give myself the resource I wish I'd been given back in 2015 when I first discovered Bitcoin. And that's pretty much how I got here. I published the book back in 2021. And now I'm operating in the industry. I'm setting up a venture capital fund right now, and we plan to fundraise the next few months. And that's going to be focused on investing in Bitcoin projects. And other than that, I do a lot of thought leadership. I've been researching quite a bit into prospectively, like what banking systems could look like, very long term in this economy as Bitcoin starts to fulfill the store value function better, and it starts to get adopted more as like a unit of account, a medium of exchange. That there's quite a bit of infrastructure I think that needs to get built, and ultimately to get it there, a lot of like the future of Bitcoin's a very irreducibly complex system. There's a lot of scaffolding that needs to get built in order to get the skyscraper to where it's going to be. So there's a lot of things like that I'm really interested in. I do a lot of thought leadership around like the theory of, will this be a full reserve type system? Will this be a fractional reserve type system that moves on top of Bitcoin? Is that replicating, fiat central banking within a new digital economy? And I get into a lot of those questions, as well as from a technical standpoint, what it could look like and what other layered protocols like the Lightning Network or Fedimint and things like that. But yeah, I'll stop there. I think that's kind of like where I'm at now.
Okay, great. Thank you for getting into the details. One of the things that you mentioned was how Bitcoin can be an alternative to central banking. Can you talk about why that would be needed, or what are the benefits and the advantages of having an alternative to our current, central banking system?
Yeah, so I mean, and this is what I get into in my book when I go through history, but you can see a pretty strong pattern between the adoption of some sort of private node issuance system and how that ultimately converges upon some form of centralization, which ultimately culminates in the creation of a central bank. And the problem with central banking is that, it's something that you can like theoretically justify from like Keynesian based perspectives, at least, has been theoretically justified. The other end of the spectrum is that nobody is smart enough to understand the complexity of an economy and look at all the aggregated information and make calls determining the value of somebody's time preference based on that. And the fact that we actually think that we're capable of that is, yeah, it's something that is, I think it's a very egotistical perspective on behalf of the people that are doing it, because you're impacting people's lives so significantly. And, when I talk to people every day who are, caught up in a lot of like social issues around politics, I view a lot of that. It's just like, it's impacting your life more than anything else is what the Fed's choosing to do. And nobody knows what's going on with that. And I don't think it's, number one, it's complex, but like a lot of things in finance and economics, I think that they make them more complex than they actually need to be to describe to the average individual. And I just think it's a major problem. I think that central banks ultimately exist today as a revenue source for governments because we wouldn't be able to tax directly on those amounts. If people don't really know what's going on and they think inflation is a part of life, they can do that. And then looking at it from the systemic level, there's very strong arguments to make that centralized control of credit issuance causes boom and bust cycles. And that's not a very out there concept. That's something that's very easy to argue against. And so if we don't have people meddling in the value of time and the value of our time preferences and allow the market to sort itself out with some form of money supply that is not controlled by anybody, that could solve quite a bit of problems. And not only does it solve quite a bit of problems, but it has quite a bit of implications for like the decision making that society would undergo after that. Some of these unsustainable cycles that we get into, and we see all this malinvestment that gets spread throughout the economy, that stuff would go away, not go away completely, but it would be reduced very materially if people are only investing in projects that the markets are allowing them to. The markets are making the proper incentives for people to invest in the right things. I think that a lot of the bloat within the technology industry today, the epitome of it to me was when SoftBank raised their vision fund and was just shoving money down founders' throats. And that was just, we want to invest in tech. And there's all these apps being built that are, doing these minor things for people while we have supply chain shortages going on around the world. And there's just all this capital that's being invested in things that are worthless when it should be going towards things that people actually need. And that's what happens when you start to screw with our information that we use to make capital allocation decisions, AKA money. So yeah.
You'd mentioned about central banking kind of being as a form of like revenue collection. Are you referring to the fact that by inflating money or the money supply, that essentially what happens is we have a loss of purchasing power and that becomes almost like a form of like hidden taxation?
Right, exactly. So it's basically without a central bank buying the US Treasury's debt, they wouldn't be able to issue the amount of debt that they do. And if you look at some of these charts, a friend of mine, Ryan Deedy, put this great chart together where he, analyzed kind of the past few decades of, sources of acquisition of US treasuries by different purchasers. And the amount of foreign purchasers of US debt has declined so substantially. And the Federal Reserve indirectly, this is kind of more of a, people get caught up in the technicals of how it works, but like without the Federal Reserve, primary bank dealers, they wouldn't be buying these bonds from the government. They need the Federal Reserve to step in and change those on their books in order for them to create that demand indirectly. So it's effectively a way for the government to create demand for its bonds through a central bank. And whether it's quantitative easing, whether it's lower interest rate policy, when you're expanding credit within an economy in some form, you're expanding asset prices, you're expanding some form of rise in prices. How that gets through the banking system and what prices it ultimately impacts depends on who in the economy wins and loses from it, which is another major issue that occurs from it. We don't know the indirect impacts that we make from these types of decisions, and there's strong arguments to make of how much wealth inequality has emerged over the years because of it. And so I think that when you have this system where the government can perpetually finance itself through debt, that ultimately leads to some form of inflation that ultimately is paid for by the individuals buying those assets and not the government, who is able to issue that debt and spend it before the asset prices rose. That's just another way for them to finance themselves. If you look throughout history and the amount of times that central banks had to repeal their gold standards and print money so that they could go to war. And then you take that ability away. Well, that has some pretty major implications for war. I mean, if we got off that type of a system, that could impact the world very significantly. Doesn't mean war goes away, probably not. But I mean, the scale at which it can exist and the ability for governments to actually, go after it for certain reasons is reduced materially because they need to get their population on board with a direct tax increase if they want to go to war, which means it has to be much more legitimate. And yeah, so I think that's kind of like the general idea.
Yeah. Well, you explained that very well, in fact, with regards to inflation, how that ties in with essentially the Federal Reserve being the largest buyer of treasuries out there. And so basically that, it allows the kind of, if you want to call it the perpetual cycle to continue to take place. Because otherwise, if you were to leave it up to sovereign individuals and fund managers and so forth to make these types of decisions, would they necessarily be buying treasuries, at X amount of rate that's being offered on that bond, whatever happens to be at that time.
Right.
When it's the Federal Reserve going out there, they don't have these types of constraints or requirements. They just go out and buy it.
Yep, exactly. They don't have to be discriminating. They just go get whatever they want to get. And I think a good way of looking at it is the fact that like cash has become such a good trade while inflation is high. Like that's what they want. They want to push you into a corner where you're forced to hold cash that is, suffering from inflation. That's where the revenue comes from. And yeah, they're winning at that right now, but I think that this game might be over in the, next few decades.
Yeah, at some point you got to wonder how much longer can he continue on at this pace, especially now that there were many years where although there was an increase to the money supply, and there's different metrics of it as you're big finance and economics guy, but there's different metrics for how to like measure the money supply and the growth of it and so forth. But for the most part, inflation was fairly tame, relatively speaking. Of course, the CPI is a very manipulated number, so it isn't a true metric in terms of the loss of purchasing power. And ultimately it gets more complicated as everyone has their own, CPI, right? Like you go out and buy different goods and services than I do. So, your loss of purchasing power will be different than what I experience. But at the end of the day, the fiat currencies continue to erode. And I guess maybe that's a good way to kind of segue into like Bitcoin and how Bitcoin can be that alternative to central banking and that alternative to a supply of a currency that can be inflated, at the whims of central bankers. And I like to kind of tie that into something else you mentioned as well about valuation. And how do you value Bitcoin, and how does one value an asset like that, which kind of like scares people from time to time because they see the volatility of its price denominated, for example, let's say in US dollars. And how would you kind of explain in terms of like a way to value Bitcoin that makes the people can kind of like grasp and at the same time kind of see it in a way that's how it can be an alternative to fiat currencies?
Right. So I think that like if you look at the potential market sizes for it, and it's complex, right? If you're doing a top-down analysis and there's a lot of components that go into it, and there's also necessary technologies that either have not been built or are currently emerging that are necessary for it to expand into new markets. So it's kind of like it would be more of a technical, like if you wanted to get as quantitative as you could with it, you'd look top down at market sizes and you'd say, okay, well, at a minimum, like the gold market's this size. If, Bitcoin has superior properties to gold in terms of its monetary value, then it'll consume like the monetary premium of the gold market. You can make similar arguments for other assets like real estate. And I think that like that's one way to look at it. And then if you expand that further into like a global monetary system, hypothetically, at the other extreme, Bitcoin becomes this asset that doesn't have any notes that are being traded on top of it. It doesn't turn into like a fractional reserve system in any form, but actually is like the de facto money that's used directly by everybody. And it requires like the Lightning Network, for example, for that to actually exist. Not certain that that'll emerge and get the scale that we're expecting. There's limitations of that. But if it does occur, then the value of Bitcoin would be, all the assets of the world in some form, reduced by the amount of credit that exist, because credit doesn't have to emerge through a fractional reserve system. There's other ways that it can emerge too. So the question is, like, where a lot of the debate comes into is, and something that I focus on too, is trying to get my head around what I think that type of system will be, because that'll impact what the ultimate end valuation of it is, and how much credit will actually exist and expand in an economy that's not controlled by central banks that are arbitrarily increasing the amount of credit expansion. That it would be very fundamentally different if it was completely free market. So like getting to that number is kind of the first part. And then you would basically make an argument that today, if you wanted to try to create a model, which is, this is such a theoretical exercise that it's not necessarily people that I think focus on like certain data points. It's probably not the best way to spend your time. I think a better way to spend your time is just learning more and more about the technology. But if you want to try to get into that and like track that, then it's effectively like you have a massively implied discount rate on whatever its current value is versus that. And I think that a lot of that can be factored in, the way you think about that is what's the probability of success that it has of getting to that point today. And it's still incredibly risky. There's a lot of things we can talk about. There's, Bitcoiners make arguments for the global game theoretic incentives, which I feel pretty confident about in a lot of ways, but are we certain of that? No. There's a lot of, there are forms of centralization within the supply chain of the industry that can be used as an attack vector against it if developed economies really want to go after that. Will that kill it? I don't think so, but it could certainly, slow how much it expands or how long it takes to get to that point. You have to look at Bitcoin like you're investing in almost like a startup. And it's something that's still highly uncertain. I think that it is certain to have a market at this point. I don't really see a scenario where Bitcoin doesn't at least consume a pretty big proportion of like the gold market. But outside of that, the rest of the upside, it's really hard to say. So is that worth, the volatility that you're experiencing for it? Depends on your time horizon, right? If we go back to like just portfolio planning theory. But I think that and another interesting argument too that I really like is that it would effectively be, if we get all the right tools in place over the next, say decade, that can make Bitcoin be used by the average consumer in an alternative monetary system in a practical manner. Then I do see like, Greg Foss in the industry makes the argument that you're more at risk not owning Bitcoin than you are owning Bitcoin. You should at a minimum have a small allocation because it's insurance against, this whole system crumbling at some point. And I think that's a good way to look at it. I think that, there's a lot of things that need to be in place for it to ultimately, for the market to see that. But if those get put in place within the next 5 to 6 years, and it is kind of like legitimately a large proportion of the world can leverage it in that form, then I would see in a crisis scenario, it's probably going to crash as a risk asset, but at some point, I would see it decoupling as an alternative type of system. And I could, talk for a while about a lot of the arguments around reserve balances and East and West geopolitics and how like a lot of these things are leaning towards a direction of that type of a system being more adopted. But like that's generally the view that I'm looking at it from in terms of valuation.
Okay. Yeah, and Greg's been on the show previously, and he kind of basically talked about, how the U.S. dollar, for example, is not risk-free, or U.S. treasuries, I should say, are not risk-free, right?
Yeah.
Although in finance, and I remember in college when I took finance, you're made to believe that it's a risk-free asset, and it's not. And he basically proves that by saying, well, you can go online and you can find out, and buy credit default swaps on, U.S. treasuries and other types of sovereign debt. And so if you can buy credit default swaps, and inherently that's telling you that there's a risk behind owning these things, because otherwise no one would want to go out there's no reason to go out and buy credit default swaps, right?
Right.
So then he further, when he was on the show, talked about utilizing Bitcoin as a way of having like portfolio insurance. So if you're a portfolio manager, how do you insure against, if you're holding U.S. treasuries or any type of other sovereign debt? And so how Bitcoin, a small allocation of Bitcoin, can be a way to kind of like mitigate for that, I guess, or to mitigate for that risk. So I'm just providing some background to the listeners.
Yeah.
Be familiar with Greg Foss and some of the stuff that he's out there talking about.
Yeah, and I think that another interesting way to look at that too is, what is defaulting, right? It's if I'm a company and I can't produce enough cash flow to support my debt, and then I roll over my debt in order to pay off my current debt just at worse terms for, a longer period that I'm paying more expense for. It is, a way of looking at it as like a default. And the only reason they can pay that debt is because they can take on more debt, and that's what the U.S. government does. It just pays on its debt with taking on more debt. So I mean, every time that we do like have to, I think that like the U.S. government is effectively defaulting in some form. The key hack that they have is they can perpetually default on that until they destroy the value of their currency at some point.
Yeah, exactly. Your book is titled The Seventh Property. Can you kind of get into the seventh property, what that means and what's the origin of it?
Yep. So when I was first getting into all this, and I was like, okay, well, what's my framework understanding for Bitcoin? I think from a fundamentals perspective, what got me there was looking at the first thing you need to learn and talk about before you even understand how Bitcoin works or anything is you have to understand money and banking. And the first place to start with is, what fundamentally has made money valuable throughout history. And that's what made it valuable throughout history is very different than today. And the framework of thinking is basically like when I was first getting into a lot of these topics, like, when I was in school and they were talking about the risk-free rate and all that, and they were also talking about, monetary properties and the functions of money. And like, that was something that I remember in my economics class was like this very cursory review. It's kind of like, here are the functions of money and we know that, and let's move on. And it's funny because like that ended up being probably one of the deepest areas of research that I've gone into in terms of economics since I've graduated. And I think it's probably the most valuable thing that economics students could be learning. It's really a shame to see what the university system is focused on when they push. And I'm getting on a tangent here, but like they'll get into like detailed micro and all these formulas and all these models and econometrics and stuff like that. And it's just like people don't even understand the fundamentals. There's so much more that you need to understand before you can even get into the quantitative side of economics. But nonetheless, I think with the monetary properties, when I was getting into this, I was kind of like, okay, I've heard of the functions of money. I've heard of the properties of money. I know that, the most popular book in Bitcoin was like the Bitcoin Standard, and Safe Dean kind of talks about how the functions of money exist across 3 dimensions. So there's all these different topics that I could hear and see Bitcoiners in the community kind of like mixing up sometimes. And I was like, okay, the first thing I want to do in the first chapter is like make this all very clear. So when I got it clear in my head, basically the idea is Karl Menger in the 19th century kind of defined from the Austrian perspective that money is the most saleable good. Whatever is the most saleable good, that which can be sold at the most ease is something that exists as money within the economy, or at least the best form of money. And then you can kind of break that across 3 different dimensions. You can look at its saleability across time, something that's a very good store of value. You can look at it across space, something that's a very good medium of exchange, and something across scales, which is something that's a very good unit of account. So when you look at it across the dimensions and then you think about the functions of money, you're like, okay, so being a store of value is just something that's highly saleable across time. Being a good medium of exchange is something that's highly saleable across space. And then being a good unit of account is something that's highly saleable across scales. And then it's like, okay, so that's all looking at everything kind of at face value and saying that's how we know how to describe something we're seeing. But what about anticipating something that could potentially emerge as a better form of money? And that question boils down to, well, what are the properties that fundamentally enable it to serve those functions best? And that's when you get into the properties of money. So the first chapter of my book, I kind of mapped this all into one chart. And the properties of money, there's kind of like 6 generally defined common properties of money. And I think that, that's scarcity, that's durability, divisibility, fungibility, portability. And and the last one's acceptability. But when I was thinking about this problem, and I start off kind of saying like, this is the framework from which to think of money. So if you have these 6 properties in a particular good, and they're relatively better than any other good, then theoretically, if not coerced by the government, but if theoretically private markets could begin to choose it, then they would choose that form of money. And the idea is like a good way to think about this, because I think it's hard for people to conceptualize the value that a more efficient form of money has within an economy. And I think the best way that I got to is that if you think about transacting is not it's an expensive process for people. It's something that is somewhat of it's like a back office. Like, we don't want to have it, we need to have it. It's this expense that supports everything else that functions. And money kind of works like that too. We don't want it. We want to spend the least amount of time worrying about how to transact. So the labor and capital that gets expended every year for transactions to occur is all dead weight loss that could go towards, curing cancer or something, but we need to do it. So it's not necessarily dead weight loss, but we want to minimize that cost as much as we possibly can. And the more efficient a form of money is, the more minimized that cost is. So that's when I think about it from the perspective of, if we had money that was emerging privately and it was highly efficient, then we're minimizing that labor and capital that gets, wasted every year on this, like, horribly, integrated, slow, manipulated financial system with all these different intermediaries everywhere. So if we can reduce all that, and then we can have a bunch of people who are running, like payment providers, all of a sudden go into cancer research, then that'll probably be better for the world. So like, that's one way that I think about how having a better form of money is valuable to the economy. And then the question becomes, okay, well, what about Bitcoin makes it better than the other form of monies? And in my book, I go and compare that by each property. I say, this is why it's the most scarce. This is why it's the most divisible. This is why it's the most portable. And I go by each property and kind of make that explanation. But one key thing about Bitcoin when I was getting into the research is I was like, okay, well, what about this decentralization piece? What about Bitcoin being decentralized makes it better than the other form of monies, and how is that considered within common monetary properties? And I when I thought about it categorically, I was kind of like, there really isn't a bucket for that. And so what is that bucket? And like, really what I defined, and I go into this with the backing of going through history and saying that we saw a pattern throughout history of centralization within banking systems over time. And, today with the current technologies we have, a lot of that isn't even as relevant anymore. And our centralized banking system actually is kind of just a path dependent product that occurred throughout history. There's an opportunity to fundamentally restructure how it works in a way more efficient way. So when we saw that trend of centralization throughout history, we always saw that centralization within banking systems, within money, and within the intermediaries always led to forms of moral hazard. So like, what I kind of defined that as in my book is, I had the idea that if we think about the idea of moral hazard is something that, emerges from a conflict of interest between a principal and an agent. And with no other good that exists, money, because it's the most saleable good, has the highest risk of moral hazard. That's why financial firms are the most regulated in the world. That's why we see the greatest amount of fraud, because it's so saleable. That's the ideal good to commit moral hazard upon. You could do it with a car, you could do it with a house, but ideally you'd like to have that value in money. So people just go straight to the source. And that's one of the issues, is that, every time we had issues emerge through moral hazard throughout history in like private banking systems, the governments ultimately used it as an excuse to co-opt control over the banking system, which ironically, they ended up doing the exact same thing subsequently once they had the power over it. So moral hazard just been this persistent issue that's occurred through centralization within the banking system. And it was necessary. It was very hard for us to come up with solutions. That's the primary innovation that I think Bitcoin brought about, is that it actually reduces quite a bit of moral hazard, even being possible, as long as we can keep it decentralized. And the fact that it's decentralized across like the primary ways that money is intermediated, so through its its storage, its production, and its verification. As long as we keep it decentralized throughout those functions in a material way, then it has a certain property that enables it to not change. And it enables it to be something that we can be certain is going to be, what it's not going to impact our expectations of it in the future. So what I qualified that as immutability, which means like resistant to change. And that was kind of the idea, is like, now that we have this innovation that has made not only a form of money that's more efficient across all other properties of money, historically it was always a trade-off. The more decentralized you wanted your system to be, the less it functioned well in the other areas. Bitcoin's innovation is that not only is it better at all the other 6 monetary properties, it's also immutable. And that is what I think the primary value add is. And I also think that in 10 years, if some sort of new idea comes around and it has the same properties of Bitcoin and it's immutable, we need to be using that type of framework when we think about money now, because it's just a true innovation. I mean, take the immutability away from Bitcoin, and I think it's still a better form of money than anything that we can really see. So like, I think that despite, it'd still be bad and it would be manipulated at that point, but nonetheless, like it's just very efficient in a lot of other areas. So that's kind of the general framework, is that I think that Bitcoin was just an innovation on money, and it's an emerging monetary good that we haven't seen within a millennia. That it makes perfect sense. Everybody's confused about it because this is just something that doesn't happen throughout history very often. And that's why I'm so passionate about it. I think this is like a very major innovation, and I'm happy to be alive right now.
It's definitely a very interesting time to be alive, especially involved in the Bitcoin space. So ultimately, do you think that Bitcoin causes a monetary revolution, or do you think that Bitcoin just happens to be there at the right time when a monetary revolution is needed?
So I think that it is kind of interesting, right? I feel like it's almost like a storybook's playing out in terms of the timing with everything.
Yeah.
And Yeah, I think it certainly is needed. And I think that that's much more prevalent at a global level to people in, fiat societies within emerging market economies than it is to people in developed economies. But it certainly is needed. And I think a lot of the reasons that people don't understand why it's needed is because most people today just have never known anything else. And we've had this fiat system running for over 50 years now. I very rarely, and that's one of the big things that I think the Bitcoin community's done for the world is, 2-3 years ago, I talked to people and very, very few people understood the word fiat. And now a lot of people I talk to know what the word fiat means. And I think that's really important because so many people are unfamiliar with what the problem is that Bitcoin's actually solving. And once you have that problem defined, and that's why whenever I'm meeting new people and talking about Bitcoin to them, I don't even talk about Bitcoin. I just start talking about the problem first to make sure that like we all kind of agree on what that looks like. And I think that people are really starting to realize that things could be much better. And even within developed economies, things could be very different. They could be much better. There's a lot of problems that emerge from all this. And, our property rights and freedoms have been eroded very significantly over the past half century. And I think that's really important. I also think that the timing of Bitcoin emerging when it did obviously was driven by demand. People wouldn't have spent the time and resources. Bitcoin was the product of 40 years of failed attempts to create it until it finally worked starting in 2009. So like from that perspective, there was certainly that, and that goes back to like the cypherpunk movement of, all these early developers who were, integral in supporting the emergence of the internet and open standards and how that all was built out. They all saw the future of the internet well before everybody else did. They knew that we would get to this point, and their whole thesis was that the internet is either going to be one of the greatest enablers of freedom, or it's going to be used as a tool for control. And the technologies that we build today are what are ultimately going to protect us from it being used as a tool for control. And like with what I'm trying to do within Bitcoin on the venture side, I view Bitcoin in a very similar position today. I think that the technologies that get built within the next 5 to 10 years are going to significantly impact what Bitcoin is ultimately capable of doing for society in the long run. So when the cypherpunk movement was going about that process, their view is basically, if people are going to be able to organize effectively on the internet and allow it to be an enabler of freedom, they need their own digital form of money. And they're referring to it as a form of e-cash. They need their own form of digital e-cash online that isn't controlled by anybody, that they can freely send between one another. Because when you organize with people, you have to trade, which means that you need money to do that efficiently. So that was the idea, is that people need to be able to organize, and they need a form of digitally native, uncontrollable money in order to do that. And they were whacking away at that for a very long period of time, Bitcoin was finally had like the last puzzle piece and was an ensemble of technologies that were figured out over that 40-year period, put the last puzzle piece in, and then I think that we burst something that's pretty significant and hard to stop at this point. So I think that the revolutionary aspects of it, I think, are very real, and it may not be occurring in the US quite anytime soon. It may just be more of an investment asset over here. But I think when I talk to founders that are in Africa and I talk to founders in Latin America, there's boots on the ground that are running pretty heavily with trying to opt out of their current systems and get involved in something that operates with Bitcoin and some of its enabling protocols like the Lightning Network. And I think that with all that timing, I think we're witnessing the emergence of something very significant for the world from a revolutionary standpoint. If we bring about a private alternative monetary system to the world that will enable freedom for so many different people, it'll significantly reduce the size and power of governments. And I think that there's going to be a lot of beautiful things and technologies that can emerge from that that'll just make life better for a lot of people. I have a bit of a utopian vision around it, and I think that there definitely is going to be a lot of issues. And despite me talking about all the positives of Bitcoin, it's going to be very hard going through a transitory state from one financial system to another. And there's going to be winners and losers. And it's a sad fact that we've pushed ourselves into a system where we've just put our economy on steroids for so long. If you're going to get off the steroids ever, otherwise, you're going to end up growing boobs if you don't. So we're kind of at the point where the economy's growing boobs, and now it's like, okay, well, we got to get off and we have to suffer the pain and, lose the muscle and all of that just to like get ourselves back to baseline. And that's a sad reality of how it works. It's hard to say that there's really an alternative. But ideally you want it to be as seamless of a process as possible. And perhaps there's an avenue for that too. I think there's like, a million different ways all of this could go.
Yeah, you made some great points. In other parts of the world where they've suffered like inflation, magnitudes greater than we've experienced here in the U.S. In other countries where they've had currency crashes, huge devaluations, like in Argentina and other places, you can see why they look at Bitcoin as an alternative and why there's so much more work being laid in those countries. Here, instead, the narrative coming from the powers that be and other central bankers is the fact that Bitcoin is a Ponzi scheme, and they never say how it is. They just kind of vaguely say it's a Ponzi scheme and that's being used for nefarious purposes. But there's so much more work that's been done that's shown that cash is used on a much larger scale than Bitcoin is for nefarious purposes. But they kind of gloss over all that. And so you can kind of see in a way that they're scared, right? They're threatened by the emergence of Bitcoin because they see it really for what the true diehards are trying to lay out in terms of an alternative monetary system, which threatens their system of central banking. And those that are close to that very system, benefit disproportionately than others, who are not so close to it. For example, like we talked about inflation, right? Who suffers disproportionately from inflation? It's those people that don't have assets, those people that are poor. They suffer disproportionately from that hidden tax of inflation and that loss of purchasing power.
Yep.
You have assets and you have real estate and you have other things that have appreciated over the last decade or so from all of this, money printing that's taken place. Yeah, you can kind of, scoff at, whether or not we need an alternative system. But ironically, those people that suffer the most are the least knowledgeable about how they're being abused in a way, which is kind of ironic when you think about it.
Yep. Yeah, exactly. And that's a tragedy too. I think that if anybody, I think it surprises me that a lot of the more like liberal thinking types who are so focused on equality and some of these values, I rarely meet any that are really understand how the system works. And it's like, if there's anything that's impacting wealth inequality within this country, this is it.
Yeah.
And I think that it's really important to spread the word around how it's not a fair system. Nobody should be in control of it. It's not going to be easy. There's no system that's perfectly fair because it's a subjective concept. But nonetheless, as long as nobody's making the decisions and the market's deciding it, that's much better than a board of 12 people sitting around and saying, here's how much your money is going to be worth tomorrow.
Exactly, exactly. And the markets just totally hinge on, these interest rate
Yeah.
announcements like we had, just yesterday, right? So,
Yep.
everyone's on pins and needles to find out what the Federal Reserve is going to do. And it's
Yep.
as if like, our lives are completely dependent on, these people in suits. And it shouldn't be that way, right? We should be more
Yep.
autonomous and we should have a greater say in, you know, our money and, and the value of it. And,
Hmm.
and all these other things that kind of go with it. But I want to throw out another question to you. You kind of mentioned this earlier, was about an infrastructure being needed. Can you kind of
Yeah.
maybe get into a little bit more what kind of infrastructure would be needed in order for Bitcoin to kind of grow and thrive?
Yeah, so I think that the whole goal is just to have a form of money that functions very well. And going back to my original point around the immutability topic, and I define that in my book as the decentralization of production, storage, and verification of money. So on the production piece, we've decentralized that with mining for Bitcoin. Bitcoins are produced in a decentralized way through servers all around the world. Storage is trickier because a lot of people have that in third-party custody. If they take self-custody, it requires quite a bit of work. And I think that the reality of the situation is a lot of people in the Bitcoin community are like, well, it's possible for everybody to self-custody their assets, and it's like that is true. It is theoretically possible, but it's not really a question of possibility. It's a question of whether or not it'll emerge in a market, and I think that that's going to be one of the more challenging aspects of the next decade. There's different models that I think are emerging that are a bit of a compromise to where people don't have to do the work and take on quite as much risk by doing self-custody. They can use more community-based models. And I think that could probably be one of the interesting technologies. So like there's this concept of like federations and a new protocol called Fediment, which is a word based off of federated Chaumian e-cash mints. But to simplify it down, it's basically a model that enables people to custody their assets within a community, and I think that makes a lot of sense. In a lot of developing and emerging economies, uh, community-based models for finance and banking are very prevalent, and it's something that they kind of have these. Piece together forms of infrastructure for, not a very good standardized efficient method for. And they also like the Lightning Network a lot down there too. So I think that like a technology of like community custody to keep storage decentralized at the systemic level, that could be a happy medium between everybody having to learn how to custody Bitcoin themselves. Rather, they might trust their father, or maybe their uncle and their father both share control over family finances in some form. There's all these different models that can emerge from it, and it'll enable people to choose how they want to do it. But I see community-based models as being one potential avenue for it. So that's production, that's storage, and then verification is also solved by Bitcoin. So like those are kind of like the three big pieces that I think really need to come into play. But the other, Bitcoin has kind of like two primary issues. Its privacy isn't very good because it's public blockchain, and having like an alternative, you know, there's a method also through that Fediment protocol. They have a method of, it's called Chaumian eCash, where it's basically, you can think about it as like a note on top of your Bitcoin. If you deposit your Bitcoin at your community custodial provider, maybe that's your father or something, then it directly issues back an eCash note. And that's something that's completely private that you can send around as a digital bearer instrument. It's very equivalent to like actually getting physical cash from the bank, just in digital form. And so like that's something that I think will be very necessary in order for the system to function effectively for everyday people. You need that level of privacy. If everybody hopped onto Bitcoin tomorrow, and you could go look at your boss's salary on the blockchain, that probably wouldn't be very good. So like there's all these things that are just not practical that exist from that too. A lot of people think about it like people are trying to hide money. It's just like, well, no, think about how money works today. Like you don't have privacy in terms of your bank, but you have quite a bit of privacy in a lot of other areas with your finances. And people aren't just going to jump into something where they lose all that tomorrow. So we do need systems that enable that. The other big issue is Bitcoin doesn't have enough transaction throughput to facilitate a global payments network. And that's kind of the idea for the Lightning Network, is they've created this model that, this was built a few years ago. It's been growing organically. It's recently hit somewhat of an inflection point in terms of adoption and growth, but the Lightning Network actually is much better and faster than like even Visa. And it's much better in terms of what it's actually doing than Visa, because Visa is purely just a trusted account-based ledger. And Lightning, you actually have some certainty that you can get your Bitcoin back when you're trading in it. So that's another example of a protocol being built on top of Bitcoin that's solving the transaction throughput problem. So if we can pair together the solution to transaction throughput with a decentralized custodial type model, then that is what creates the potential for an apolitical global monetary system to emerge. There's other things that we can get into too, but I see over the next few years, and a lot of these things are kind of emerging right now. I see a lot of these protocols as having the potential to enable really an alternative financial system and quite a bit of new innovations. Once those exist and once those get enough adoption, I think a lot of new technological innovations are all going to be forms of software, whether that be financial or non-financial, that's either built on top of or integrated into these types of systems and abides by their protocols. Because so many different forms of software we need are, dependent upon monetary transaction. So they're probably going to want to abide by what those monetary transactions are when people start to use these systems as money. So that's kind of like my prospective view for a lot of it. It's if we get a lot of these protocols built that solve these problems in the right way, that could really enable Bitcoin to expand to be something much bigger than, just digital gold 2.0.
You had mentioned earlier about forming a Bitcoin investment fund. Is the focus of the fund going to be on trying to build some of these systems out there to try and grow the network and to build this infrastructure that's needed for it to kind of get to the next level?
Yeah, partially. And the hard part about a lot of these things will be figuring out the timing around a lot of it. It may or may not. I also think that there's a lot of opportunity just given the credit contraction in the industry for just value opportunities that exist in Bitcoin as well. And kind of looking broadly across the different sectors within it to support that. But yeah, that's the general idea. And that's just emerging. But, if anybody listening is interested in, meeting if you're a founder or something, please feel like you can reach out to me.
Oh, great. And so how can people find out more about you and also your book and also about your investment fund that you're starting?
Yeah, the best place to get in touch with me is on Twitter. So if you look at my handle, it's just my name, ERICYAKES. Send me a DM if you want to chat about anything, and I'd love to connect.
Okay, great. And we'll include a link to that in the show notes. Thank you, Eric, for coming on to the show today.
Thanks a lot, Mo. It was a blast, man.
Yeah, thank you. You provided an amazing amount of value, and thank you for getting into the details in today's discussion. And that's all for today, everyone. Thank you for tuning in, and until next time, have a great week.
Thank you for tuning into this week's show. If you are interested in learning how alternative investments can help you build purpose-driven wealth, sign up on the High Rise Capital website to receive our monthly newsletter and free investor ebook. Lastly, if you enjoyed this episode, don't forget to subscribe and leave a 5-star review. Thank you for listening to Purpose Driven Wealth, the podcast for empowered investors.